everyone. Welcome to another episode of Vantage Point by DigiJanus. I am really excited about today's episode with Marla Soffer. She has worked across three industries: financial, tech, and fintech. She's a trailblazer, and we have had some chats, and she brings in a really unique and interesting perspective. Welcome, good afternoon, and welcome, Marla.
Thank you, Laksh. Good to be here.
Thank you. And I know you're joining us from US, which is a very odd time zone for you right now. And thank you so much for being part of the show at such late time in your evening.
It's
So
my pleasure.
so Marla has a very interesting background. She has worked in very different roles in the financial industry. She was part of the fintech X Ignite. They have been a competitor in a previous role, so I should absolutely be able to pronounce their name. and and now she is part of Microsoft, where she's part of the industry solution CTO group, and she's the financial services lead. So did I get all of that right, Marla?
Yes, but I think also important that before I joined fintech, before I was in fintech, I spent a very long time in financial services, in deep operational roles, kind of working at Bank Leumi, at JP Morgan, and at BlackRock. In different capacities, serving individuals, but most of the time serving very large institutions and asset managers, kind of within the operational guts of the economy, and how trades are settled and how securities are serviced.
Absolutely. And that app, I think a lot of people ask me this question when we are speaking to them, that how do you go from being in financial to going into tech and fintech, etc. So you are a very good example for anybody who's today in financials and wants to go into tech or fintech. Please look at Marla's LinkedIn profile, and she does a lot of amazing work, not some, a lot of amazing work. So please absolutely go and connect with her on LinkedIn. So I actually have a lot of questions planned for you. So I hope you are ready as well. So can we get started on the questions, Marla?
Let's do it.
So, Marla, let's get started with the first question. There is so much transformation, disruption happening in the financial industry. How are you and Microsoft enabling or empowering that?
So Microsoft has thousands of incredible, very high quality tools available to all industries to drive business innovation. And disruption, I think, over the last many years has begun with the cloud, and the cloud for infrastructure, for platform interoperability, for software applications. My role at Microsoft is very focused on bringing together what Microsoft has to offer to support financial services industry use cases, prioritizing the ones that are the highest demand by our customers and helping them deliver better customer and employee experiences. So for financial services, Microsoft is uniquely well positioned given its approach to security, privacy, compliance, and also its sheer scale and its presence globally. Microsoft is everywhere. Almost every company in some way or another is a customer of Microsoft's. Further, we're particularly relevant and competitive in the financial service industry because we don't seek to sell client data and we don't compete directly with our customers or our partners. So we want to help them achieve their innovative goals. And what I do in my role specifically, I'm working with a team focused on our just released Microsoft Cloud for Financial Services. I recently worked on a use case with a fabulous team of engineers and designers that highlights how our tools come together to help customers with their diversity and inclusion objectives. So specifically, enabling financial firms to become coaches, helping diverse customers with financial accumulation and holistic wellness. So our use case portrays the bank as a customer champion, helping transition a lifelong renter, maybe somebody who's never considered themselves eligible for home ownership, into a homeowner. And the story engages a persona from a target demographic, educating them and coaching them via automated flexible bot that answers questions, encourages open dialogue about money and opportunity, and highlights the virtues of buying a home in this particular persona's neighborhood. So then we bring in an automated application flow. We offer the user transparency and we set expectations all along through the process. and collaboration tools that simplify and share data to get this person's first mortgage approved. So the flow uses the best of Teams, Dynamics, Dataverse, Power Platform, Azure, AI tools, and other Microsoft products to really bring it to life.
Oh, that is a wonderful answer. And I like that answer even more, Marla, because it does give me a lot of points to talk about with you. You said about industry use cases that you are prioritizing for financial. So we'll go into that. We will also go into, you mentioned about diversity and inclusion from a product perspective and, from a workflow perspective. I would love to get your opinion on that part as well. But before I go there now, absolutely Microsoft is making great progress, and big tech, which is also a competitor or a peer for Microsoft, has made equally big impact on this. Now I want you to wear your fintech hat and answer the next question that I'm going to ask you. How, if you are a fintech, how do you see big tech today? And you can answer it from a big tech, excluding Microsoft or including Microsoft. I leave that option to you, because they are enabling infra, they are enabling all these services. They've made it cheaper for the companies to roll out newer offerings and leverage on their AI machine learning workflows, stuff like what you just mentioned. But at the same time, some of them are also getting into financial services. So as somebody who has worked in fintech, how do you look at that, and what do you treat them as, a competitor or a collaborator?
So there were a couple of questions in there. I think it's true, and it's been a key theme at a lot of conferences I've been to over the last 3, 4 years, that big tech might be coming into financial services. And I think different big tech companies have had different business strategy around this. And all of them are looking at industry solutions in some way or another and finding their path. So there's multiple financial solutions offered by some of Microsoft's top competitors, including payments, credit primarily for now. But it's certainly going to grow from there, and you're probably going to see more products coming out from big tech companies. Some, that they grow organically, and some through partnership. A lot of it's through partnership. Microsoft's pretty deliberate about supporting customers to achieve more, and a differentiator is our approach to privacy and customers' data being their data. If I was a fintech, as I have been, I see big tech companies as a partner. So they've got so many rich resources. They're hungry for industry use cases, and they recognize fintech or health tech or retail tech or any other type of industry tech and the disruptors as their opportunity to be on the cutting edge of how tech can really enable the industry into the future. So further, a lot of these tech companies have very rich partner ecosystems. And through those partner ecosystems, they help fintech companies that build their assets on the big tech platforms to grow within their own customer or prospect universe. So they're a great channel opportunity. They offer a tremendous amount of customer introductions, kind of expanded use cases, opportunities for customers to take advantage of cloud obligations that they've made to those companies to consume. And I view the partnerships between fintech and big tech as net positive. They're supporting each other to deliver the best fast-paced innovation that the market demands. And if you look at the partner programs and what they offer and how they support your business as a fintech is key. Value to be gained by a smaller firm looking to ride on the rails of a bigger firm that has significant presence, it has credibility, it has strong, relevant tech solutions to complement whatever an emerging fintech wants to deliver to its clients.
So, see, absolutely. Thank you for that. Now, what you mentioned is where the collaboration part of fintech and big tech comes in, right? But how, and this is where, again, you being a part of fintech, how do you treat a fintech? How does a fintech treat a big tech when they are also a competitor? That is where I'm trying to, get that perspective from you.
I think most big tech companies can look at almost any competitor company and find some layer of co-opetition. So just even between big tech companies, there's a tremendous amount of partner opportunity almost between any two companies you can list out. So I think that the same is true between big tech and fintech. There may be some fintech companies that feel incredibly competitive with big tech, but I'm sure if you challenge them, they'll also look at what kind of opportunities could they find in looking at it through a slightly different lens and viewing it as more of a co-opetitious approach. Now, there are different cultures from big tech company to big tech company, or from fintech company to fintech company. And looking at the culture, looking at the business strategy is actually pretty important. And a lot of fintechs might look at, well, who are the customers that are using this competitive technology, and how competitive is it with me as a fintech if I'm looking at them as a competitor? And if so, you may choose to go head to head. And then the issue becomes, what is the value in that to a customer? So I'll give you a great example. There are some very logical customers out there that are pretty averse to working with Amazon for very logical reasons. The biggest retailers in the world, prefer to find any opportunity to partner with a fintech that's not built on Amazon. And so you look at, if I'm a fintech and I'm concerned about that competitive capability, there's other big enterprise firms as a fintech that I can partner with to scale my offering that is separate and distinct from what a big tech might be doing to crunch in on my space. And so I think that fintechs can be very deliberate and strategic at looking at which customers they want to target to find growth and scale, so that they're less concerned about how a big tech company is coming into their space.
Oh, Marla, that is a wonderful, wonderful answer. Sorry, I put you on spot there, but you have come out with flying colors. So you used a very nice word, competitor or competition. So for those of our listeners who have not heard that word before, it is a 1996 book, which is an amazing book. I have read it, it is one of my favorite reads. And if you have not read it before, please absolutely go and read it. And Marla just gave you a wonderful example of how big tech and fintech can be competitors, or they can get into competition rather than just being competitive with each other. So Marla, that is an amazing example. uh, thank. Okay, now we are going to get deeper into what you had said. Like customer use cases that you were talking about, which you are prioritizing, and diversity and inclusion. And of course, I'm going to find some more curveball questions as we go ahead. So, Marla, let's get started on this part. You mentioned there are customer use cases that you are prioritizing as the financial services lead. Let us talk through a few use cases that you are looking at these days and how they are impacting the financial institutions you are working with.
Sure. So, generally across the industry, customer journeys are nothing like they were 20 years ago. So, financial services used to be an industry that was very, very focused on real, live, human handshake type engagement, whether it was walking into a bank branch or building a relationship with a financial advisor, oftentimes cold calling through phone books. That is just not how customer journeys work today. There's been a significant amount of change. So the use cases that we're focused on are very focused on uh, introduction to a product in context. So when a customer is already researching, they're already educating themselves about what financial solution they need. Tech has made the matchmaking process easier. So allowing firms to share their differentiators when it matters, when the customer's and eyes are open to hearing about it. They can track and follow up on interested prospects, learn about them, even if the product onboarding hasn't yet begun. They can start gathering data about prospects, about customers. And then the application part of the journey is getting much better. So data integrations can make the form capture process easier, reduce potential errors and identify errors, and simplify the whole know your customer or due diligence or AML type process that financial services firms go through, and any other compliance or fraud related check with very broadly integrated technology systems. Another way that journeys are changing is by using AI or machine learning to surface up next best action. So once a customer goes through one step in a process or an application is done and approved, tech is helping companies offer you the next most relevant product through a single brand that a customer might trust and have a good experience with. So, what financial services, I think, across the board companies are doing is they might have a core product, but they're all trying to deepen their customer relationships. And that may be by offering their own proprietary product, or it might be by building a relationship with a fintech to white label a product. And so I think using technology to learn more and own as much of the customer as possible deepens and lengthens that customer relationship over time.
Absolutely, Marla. And if I can add some perspective to that, for our listeners, because I work a lot with, the retail banks and, the wealth managers across the region. And customer journeys look so different today than they looked even 20 months ago. And customers are now looking more keenly to engage online. They want a data driven experience, which Marla just talked about. And that whole day and age of your RM arranging special Korean cookies or water from someplace else, while I think it will be relevant once we are in a post COVID world, but the journey is going to completely be different. So Marla, absolutely couldn't agree more with you that uh, big tech or data and analysis is actually changing customer journeys. And the bigger thing is customers are driving this change because they do want to have these journeys. Now you mentioned a few things here which I want to touch upon. You mentioned about AI, machine learning, data analysis, and all of that stuff. So let's start with the basic first. How do you think data and insights will further impact customer journeys before even if we go into AI and machine learning? See, AI and machine learning is a few steps down the road, right? How do you think the data and analysis part can further enhance customer journeys today and tomorrow?
So, very simply, I think data and analyzing the data that companies have on hand helps companies sharpen the product that they offer. So, they may have any number of products in their menu to deliver, but using data and bringing it to bear on any particular campaign or opportunity for growth or deepening or extension with a client, they can actually determine what product to offer where, how, when, and under what circumstances to which of the right customers that they want to reach out to. So it can help with their segmentation model. It can identify what images have proven to resonate most strongly with customers, what wording, how customers type, whether they prefer their phone or their computer or different workflows and for different product sets, what times of day are most likely for a sale, who are the influencers that matter to customers. Machine learning, I know you didn't ask about this one yet, but I think it helps actually further sharpen and tweak decisions that you might make as a customer so that you buy what you need at the time that you need it. So, in time, I think that financial services will get better at not overselling or underselling products to consumers, but getting it just right based on analytics and data. And frankly, it creates better outcomes for both the user and for the company looking to deliver products.
Marla, absolutely bang on. Couldn't agree more with that answer. I have a further question for you. So, do you feel that the financial industry is being further consumerized, like some of the other industries have already been done? And how do you see that playing over the next 5 to 10 years?
So, the answer absolutely yes. And if you think about it, our lives generally have changed dramatically just over the course of this pandemic. So, over the last 18 to 24 months, we have normalized, consumerized experiences like curbside pickup, grocery delivery, online fitness. I've become very obsessed with online fitness, investing in brand new types of assets. TikTok and Reddit for investment advice. They're these kind of financial services that are being driven through consumer channel. So I think similar to those experiences, we want financial services to be easier, to be more personalized. We want a pleasant experience. We want to manage our financial lives through a clear, intuitive, single pane of glass. We want to plan for and make financial decisions wherever we are and in ways that are the most convenient to us when inspiration strikes. So sometimes we might want advice. Sometimes we might want to do independent research or scroll through our options. And sometimes we might not. We might want agency over our financial lives, but we also want security. And times have changed. So we're very aware, I think, of the risks we face. We want to protect our identity, our assets, our family, our futures. And unfortunately, sketchy behaviors by financial institutions and bad actors have left us uncertain about who we can trust. But for simple tasks, our preferences have changed. A lot of us prefer not to speak with a human or physically go to a branch for support. We prefer to interact via text, or we're happy to share plenty deep information about our financial lives with a bot, and to research questions independently. So this is kind of how consumerization is changing where financial services is heading. It's interesting. I heard someone quote the other day, the best psychoanalyst, and it's true for very sensitive topics that humans engage in, is Google, because everyone is willing to put in things that they're looking to research and investigate about themselves without fear of shame, without fear of a human kind of looking down on them. So money discussions are definitely coming into that realm where people are much more comfortable exposing what they know or don't know and educating themselves through technology, because they know that there's not kind of, prying eyes or some sort of judgment on the other side looking at them.
Absolutely, and you make a great point there. And as you talk about the consumerization or further consumerization of the industry, I feel very personally about it as well. I've been talking about personalization, hyper personalization being a big opportunity. Now, I'm going to put you on a little bit of a spot. On a scale of 0 to 10, how prepared do you think the financial industry is towards offering deep personalization or hyper personalization based on your experience?
Two, maybe one. I think they're at some stage of developing the capabilities to deliver personalization. But our industry is still a very product focused industry. And I apologize for cutting you off. And I think effective personalization is pushing financial services firms to cross boundaries that they're not yet comfortable crossing. So they have within them and across them different silos, and they're just beginning to break down the silos. And if you learn, for instance, that a customer needs emergency savings and you're an insurance company, you might not be very positioned or incentivized to help them open or save in a bank account on a broader scale. So there's huge swaths of the industry that are just now opening up to consumers. So think about private investing. Historically, investing in private equity or private debt or venture capital or even real estate was limited to institutions and the ultra wealthy. So the entire operational, financial, and infrastructure models behind these industries has to change to enable more access through technology. And deep personalization is going to require knowing much more about each individual person to deliver the right service in the right circumstance at the right time to the right person. And it's not just about having the data about individuals, it's about using it appropriately and respecting an individual's security and privacy, and still personalizing it effectively under an umbrella and under kind of some boundary of very deep trust. And I think where we are now in this stage of evolution is that companies are trying to do this and they're getting it wrong. But I think we're at some very early stage on a journey, and it's going to take time to find balance between trust and the right level of deep personalization, because individuals want to protect themselves. They want to protect their own data. They want financial services that serve them, and they want to actually receive those services from institutions that they trust. And so the way that companies come about acquiring the data about individuals is important, and using that data in context so an individual feels that it's being used with integrity and in the right ways is important. And so I still think we're early days in kind of the industry getting this right.
Absolutely. And I wanted to clarify on 1 to 10, 1 being a low score and 10 being a high, right?
I think I answered appropriately then. I think I said one
Yeah.
or two. And yes,
Okay.
my context was the same, two
Yeah.
and one being fairly low.
Because financial services banking is a big part of our audience, so I could see them celebrating. Yeah, Microsoft thinks we are, one or two in top 10. So just a clarification: this is Marla's opinion, not mine. So. So I had a question, and you answered this really perfectly. I was about to ask you that what could they do differently, and you answered that perfectly. That it is not only about data; it is about thinking about customer journeys, what the customer wants to achieve, giving them that respect, privacy, and making the correct use of data. If that could probably be a fintech's mission, what you just described there, because it is so important these days that we have a balance between privacy, how the data is being used, and how we are enabling people to go out there and be the best version of themselves or achieve the outcomes they are looking for. Now, this brings me to a next question, and I'm referring to a conversation I had with a C level maybe 2 or 3 years ago, so not a very recent conversation, where they asked me that we were trying to offer them some cloud services, and they're like, "This service is perfectly what I need, but why the cloud?" And of course we had a few hundred points of to explain why the cloud. But I ran into this gentleman a couple of weeks ago, and they are like, and at that time there was a huge outage going on. So, and they were like, this is the outages are the reason why I don't want to move to the cloud. So, Marla, in your role in Microsoft, how do you answer that question? And do you think these outages are, de-accelerating the transformation that clouds can deliver?
Well, let me start with the outage answer, and then I can also offer a little bit more color if there's interest in kind of why the cloud, because there's now so many answers to why cloud. But let me start with outages. And I personally believe that outages are a great excuse and reason for inertia for people who are averse to the cloud. So if they're very confident and comfortable where they are, then you question how innovative are those people, and is what they're really seeking inertia? Are they looking to kind of stay where they are? And to those people, I ask about what is their alternative. Has their on-prem infrastructure ever had an outage? Has there ever been an error in communication between systems? So I have spent my career in financial services operations, as I said, and can tell you that this argument, while it may have some validity, is best faced with that question. What other alternative is out there that eliminates all outages? And I don't believe there is one yet. And the benefits of the cloud computing far outweigh the drawbacks for the vast majority of companies and use cases. So you kind of look at cloud and what it can achieve. You look at scalability, you look at cost efficiency, you look at interoperability, you look at the ability to get something up and running without kind of having to engage with any number of infrastructure decisions and setups. And it's a very compelling argument to make. And you can ask the question about outages, but you have to look at yourself really well in the mirror and say, well, have I ever had an outage in kind of the infrastructure that I set up? I bet in most cases the answer is going to be yes. And there's also alternatives. If outages are your primary concern, you can have failovers in the cloud, just like you can have in whatever infrastructure you set up independently. So you can have any number of failovers. And if you choose not to pay for those failovers, then that is a measure of how important protecting from outages is to your business.
Marla, you see me introspecting during your answer, and the audience might have not seen that video because we were focusing on you. So I was introspecting because a large part of my day job is working with financial institutions, wealth managers to help them expedite their digital transformation, offer an exceptional experience. And I get this question a lot. I was thinking, oh yes, I can now take like a video recording of this And each time I get this question, I can use Marla's answer, because that is a wonderful answer. Like all those people who are, who have ever tried to convince somebody to move to the cloud, I think they can use this answer now. And I love how you summarized it right at the beginning. Outage is the perfect excuse for somebody who wants to be in inertia. So that is absolutely amazing. And now when we are talking about all these personalization, hyper personalization, all of this stuff, one thing that I have not seen in the financial industry right now is live experiences, where you are bringing data, insights, what the customer is doing, where they are, and then offering them those live experiences. One, have you seen some good use cases around that? Two, what do you think it takes to go out there and for a bank to offer some live experiences? Two questions again.
So I think there are live experiences. I think when you're dealing in financial services and you're talking about introducing a new product to someone, there's actually quite a lot of regulatory and compliance setup. So when you say live, or you say you kind of use the term, or companies may use the term real time capabilities have to be applicable to the experiences that banks want. And they have to be cautious about not over or underspending depending on what their customers want. So, for instance, if you think about kind of a particular product in the financial services space, payments. So, real time payments may sometimes be really important in some cases. And you may want to have kind of, immediate transactions done. Credit decisions, same. Sometimes it needs to be really important. You need to kind of understand quickly if that person is creditworthy and make a decision. So let's say you're kind of you have a customer at a checkout. I don't know if you just did any shopping over the holidays. I did some shopping and went to stores where I saw kind of a lot of buy now, pay later stickers. So those types of credit decisions and capabilities, you've got to be able to engage a customer or at least introduce a product in the split seconds it takes from the time they see that ad at the checkout until they're at the register and ready to pay. Others may take more time, and I think it's actually quite normal and natural where you have some payment or credit decisions that take more time. So you think about investing. In investing, same is true. Real-time execution may be really, really important for individuals that want to take advantage of market conditions, or even, within hour or within minute type conditions. But it's not at all important, or it shouldn't be that important if you're talking to somebody who's looking for a very long-term buy and hold strategy, something like saving for retirement. So understanding a customer's demand and testing repeatedly for when someone says real time or live transactions, what should that mean? What should it mean for the very nuanced, specific financial product in question? And data feeds, in some cases, you know this from your historical experience, can be extremely expensive in real time. So if you're talking about extreme low latency data feeds in the financial space, it is incredibly pricey. So in addition to evaluating user demand for real-time services, it's really important to assess the cost of delivering those services in real time and the profit feasibility of actually having real-time live transactions.
No, absolutely. And you made me look at this in a very different perspective, because I have worked with the fintech lending space in Indonesia, helping them with the credit decisioning and digital credit calculations in real time. And I had not thought of that as a real time experience, because I thought of that as a decision they are taking in real time. But of course, for the end customer, it is also an experience. That you can come in and you can get a credit score or a credit decision in real time. And a lot of financial institutions actually struggle to compete with those fintechs, because their decisioning took longer and the processes were longer. So and so absolutely, you make a great point there. And you made me look at some of my work in a different angle, not from a decisioning but from an experience perspective as well. So that was a great answer. Now, one thing you mentioned about Marla, was the role of diversity and inclusion in products. That was something we don't hear about a lot. So I would want to go a little deeper in this. So the first question is, what role do you think diversity and inclusion can play in product development or personalization, etc.? Well, would love to hear your perspective on that.
Yeah, this is a very big area of passion for me. It's something I've put a tremendous amount of time and energy into promoting and thinking about. And I think diversity and inclusion in products should come into every decision. You mentioned product development. So making sure that those that are developing a product incorporate the bespoke needs of all kinds of diverse demographics. And this can be something like accessibility. It can be something like, is the imagery going to be offensive, or is it going to resonate with a particular demographic? It can be language. It can be any types of things that are going to make sure that within the product itself, it incorporates needs or norms of any number of demographics that see it and it resonates for them. So it can also be incorporated into distribution. So how does a product get into different diverse markets? You think about go to market and a product go to market strategy. So diversity and inclusion can be worked into, like I said, imagery, language, the stories that are told, goals and dreams of all users. So coming from a wealth tech space that I came in, we talked a lot about emergency savings in the U.S., and we talked about saving for a goal like college. When we were talking to customers in India, we actually talked about saving for a wedding and kind of these very, very large expenses that families face. And so you have to bring in storytelling that resonates for different demographics, and they can see themselves in the financial product you're trying to sell. So it's actually not a secret with respect to how to drive more diversity and inclusion in your business. I think the best ways to do it are to have diverse leaders, including at the board level of the company. You also have to have diverse builders, diverse marketers, diverse users being tested for all of your product groups. And it's not enough to have champions and employee resource groups and then say that an enterprise has a diversity and inclusion strategy. I think this has been tested and proven very well in the US. I think that product expansion through diverse audiences is now proven to be good for business. It is actually profitable and revenue driving to expand your product suite into diverse communities. That was a huge argument, even in my career history, that we fought very hard with leaders in all across the financial industry to express that it's good for business. Incorporating diversity and inclusion into your decisions is good for business. And it's finally sinking in. It's finally resonating. And now we're starting to see that the market is holding companies accountable. So this is where you see kind of the rise of ESG and the rise of different investors and even buyers that are spending money are really looking at the companies that they're building relationships with and seeing how are those companies holding themselves accountable, maybe to statements they've made or maybe to what the individual consumers or users of their products, whether it's an individual or an enterprise, believes should be the approach that they take to diversity.
Thank you, Marla. Actually, you proactively thought of the questions maybe I'll ask, and you also answered those questions, even before I asked them. So this has been a wonderful chat, and I, every guest that I have on the show, I ask them this one question at the end of the show. But since you are this unique person who has worked in all these three industries, I want to ask you like the same question, but in three options. So, what is one thing that you would like to change in the tech industry, in the financial industry, and in the fintech industry? So that is part one of the question. There is another part once you have answered that.
Okay. So, one thing I want to change in the financial services industry, I would like financial services to center itself around its customers. And I think that companies are saying the right things to this end, but they're not always behaving with integrity to enforce it in every way that they make decisions. So I'm, like you heard, I'm very outspoken about diversity and inclusion, and I believe the industry can do more. It's exciting that tech can help if leaders want it to, but our industry is tricky because there are so many ways to find profit, to arbitrage, to one up the general public. And I'm excited about how tech has really helped financial services democratize and use technology to reduce the wealth gap and offer more services to more people. So, over years, the financial services industry has focused on serving high net worth customers and institutions. And today, what we're seeing is that capabilities are scaling across a much broader swath of users. But today's problem is different. So, in this expansion of capabilities to so many people, we're seeing people get into products that might not be suitable for them. So, I'm just excited as everyone else about the expanding access to credit and brand new asset classes coming out for investment, cryptos and NFTs and whatnot. But I would love to see the industry do more to make sure that the people that are getting into these products are taking suitable risk and making sure that they're setting themselves up for uncertain financial future. And so again, it comes back to what financial services can do, including, the partnership of tech, is to really center itself around its customers and really constantly iterating to try to do best by its customers. I think tech generally, what it can do better and how it can change is really getting a little bit deeper into the industry, like understanding the industry challenges that leaders within the industry are facing. And I think sometimes it's hard for tech companies to do that because their challenges are so different. And because, especially in big tech, they serve so many companies and so many industries. And so there's only so much depth you can offer. But I think all of them getting into different industry use cases and industry products is actually closing that gap. It's getting more people that come from industry are informing tech on how to best use it for industry use cases. And I think that will continue. For fintech, I think probably aligned to what I said about financial services, where it really should be more in the customer's best interest. It's easier and quicker to start a fintech company than it's ever been. There are so many fintechs. I think I saw that I forgot how many tens of billions were invested in fintech just this year, um, and and so there's a lot of opportunities that people see to make money and to drive new fintech companies. I would encourage fintech to stop and think, all right, how am I improving the world with this particular new innovation? Am I helping somebody with their financial future? Am I helping a company with their financial future? Am I introducing a product that is truly going to change the way the world operates in some better way?
Thank you, Marla. And before we let you go, because it is not every day we have people like you on the show, so we have heard a lot of things about what finance and fintech can learn from tech. So, one last question for you before you go. What can the big tech or tech industry learn from the financial industry today?
So I actually think there's a few things that tech can learn from financial services. And one of them is the ongoing, very, very long term value of deep human relationships. There's still really nothing like in person relationship building. And financial services has done a brilliant job at this. And a lot of individuals, up and down the asset classes, but have kind of built relationships with people that serve their financial needs that are the result of actually just spending time together, getting to know each other, and building that real human relationship. Tech struggles with that. So, tech is not the best at kind of one to one human relationships. And it's interesting how we're kind of now getting into meta and how can we have like virtual human relationships, uh, and try playing with each other through games and touching and whatever it is going to be. I don't know. But I think financial services has gotten that right. I also think that financial services, whether it was deliberate and intentional or not, has very, very deep experience with compliance and risk and trying to serve a customer's best interest. So, whether they did it deliberately or they did it because their hands were slapped so many times that they are now very, very well versed in risk. I was quite surprised when I left. I went JP Morgan and then BlackRock and then into fintech and then into tech. And the training and what you learn in traditional financial services firms um, about privacy, security, money laundering, like everything that you're kind of all of those trainings you're forced to take at least every year are they come as second nature. And there's even a little bit of a sense of neuroticism of the people who come from financial services because that's been what they were raised with, and they're just kind of always thinking about what would happen if I click the wrong button or if I hit send on this email. And that's actually very good discipline. And I think tech can learn from that and maybe think once or twice before they react to something or spontaneously take an action, that they just take a step back and think about, am I doing what's best? Maybe even imagine that there's a regulator looking over their shoulder, like we do in financial services.
Absolutely. That is, if I had a crown for the best answer, it will be that and then the inertia answer. So, I think that was amazing. Absolutely. I think big tech, I believe regulation of big tech is not very far off. We could see it across the horizon, which is like very close by. So, absolutely, how to get regulated, how to innovate in a regulated environment. They can learn not only from financial institutions, but fintech as well. And that answer is perfect, and couldn't agree more. Thank you so much, Marla, for joining us this afternoon on another episode of Vantage Point by DigiJanus. And I thank all our audience for joining in as well. Have a great afternoon. Thank you.
Thank you, DigiJanus.